Multiple and overlapping economic and political crises are threatening labor market recovery around the world. The International Labour Organization estimates show that in the third quarter of 2022, hours of work were 1.5% below the level of the fourth quarter of 2019. Now, that's equivalent to a deficit of 40 million full-time jobs. Now, progress in narrowing the gender gap in hours worked is reportedly at risk because of the slowdown in recovery. Now, multiple and overlapping crises compounded by the Russia-Ukraine conflict and subsequent negative spillover effects have materialized over 2022, which are affecting the world of work. International Labour Organization says their effect on inflation, especially food and energy, real wages and inequality, higher debt burdens in developing countries, not to mention aggregate demand, will reduce the demand for workers. In its October 2022 report, the International Monetary Fund revised upwards its forecast for global headline inflation, which is expected to peak at 9.5% in 2022 quarter 3 before falling to a 6.5% in 2023. Now, high and persistent inflation is creating enormous pressures on labor income, and workers are struggling to maintain their purchasing power, raising the risk of increased poverty and inequality. Now, global hours worked recovered strongly in the beginning of 2022 as pandemic-era restrictions were lifted in most countries. However, this solid recovery was revised in the second and third quarters, when the gap in hours worked grew to 1.8 and 1.4% respectively, equivalent to a deficit of 52 and 40 million full-time jobs. Now, despite African countries showing an upward trend this year, International Labour Organization says they still present a sizable gap of 2% in hours worked compared to the pre-COVID-19 crisis level.